deja vu down to 2. And of course, we try to stay out of politics, but we can't avoid it, especially when it comes to economics. And we had a number of things that came out this week, not only Super Tuesday, but the State of the Union political rally that we saw this week. And of course, we look at it in the context of economics, and did some of those stocks begin to move? And you and I were looking at, Biden-related stocks, and they did have a bump after this week.
That's correct. And I think that investors really need to kind of think about how the market anticipates the outcome. If you look at how did energy stocks do after President Trump was actually elected? Not very well. How did green stocks do after Biden was elected? Not very well. But before they were elected, that's when they had their rally. And we saw that movement in some of those green-oriented stocks, even in the prediction markets, which are not exactly the what we would call the thickest markets as far as lots of buying and selling, but even that showed a little bit of a narrowing of the gap between Trump and Biden, where it becomes more of a coin flip, or maybe it becomes an opportunity for a third party to spoil the party.
Yeah, that's right. We'll have to watch what RFK Jr. or perhaps a Green Party does. But of course, election year patterns is the reason that I bring this up. And we're starting to see a typical election year pattern. And that is because both sides think that their guy is going to win. And we're starting to see a rally begin to erupt.
That's correct. And this is the earliest in quite a long time that we've pretty much known who the candidates for presidency are going to be. We've always known that there were a number of them, right? But you don't get through the primaries, or it's not until you get through the primaries that you find out who's actually going to be representing the opposition. Usually it's the incumbent is obviously, hands down favorite to take the nod from their party to run for president. But this is the earliest that we've seen it. And I think that the State of the Union, it was directly and squarely pointed at drawing a distinction between Biden and Trump. Biden didn't have to worry about, is he going to be campaigning against, say, Haley or Trump? He knew who it was going to be.
And that is early. That is exactly right. And of course, we're talking about the economy, and the economy appears to be strong by some measures. We did get a payroll report this week, and it was better than we expected it was going to be. And we saw an ADP report adding 140,000 jobs. But of course, as an economist, you opened up the hood and looked underneath it, and you saw some things that you want to talk about.
That's correct. Yeah, with the payroll report especially, there are two of them where you have the establishment survey. So they ask employers how many people are on your payrolls, and then they ask households, are you employed? So you have these two different reports, and they've been giving conflicting answers. And that's one of the reasons why we saw the 275,000 payrolls created, but the unemployment rate went up because actually households were saying that fewer people were employed. Now, we've seen this in the past, and typically the establishment survey, that non-farm payroll number, is a little bit more reliable. But when I looked at the details of the report, it was mainly the what we would say economically insensitive areas, healthcare and government, that added the most jobs. We did see some continuing strength from leisure and hospitality, which is maybe just a leftover residual from that whole you only live once phenomenon coming out of COVID. So a little bit of weakness there. It's still strong, don't get me wrong. It's just that it's not as strong as what it was just a few months ago.
And let's talk about that. You mentioned that the unemployment rate has gone up, and it has gone up. It's 3.9%, and it was 3.4%. And there is an old adage that you like to look at, which is if it goes up by 50 basis points or 0.5%, that we begin to see a slowing of the economy. What do you think of that?
That's correct. That's called the SOM rule. It's named after an economist who really looked at the data. And it's just a rule of thumb saying that when the 3-month moving average, so if it consistently is up at 3.9%, so if we have a few more months where it's 3.9% or higher, that historically has been correlated with going into a recession or at least a slowdown.
Right.
When we dig into it and look at it state by state, as far as the unemployment rates by states, there are a number of them who have gone through recessions technically, but really I would say very mild recessions, because when you go from 3.4% to 3.9, that's not all that bad, right? I mean, that would be kind of a very weak beer kind of recession.
A weak beer, and it's about watching this unemployment rate, because will there be an acceleration or a slowing of the economy, and that's something we're going to have to pay attention to. And who is definitely paying attention to this is the Federal Reserve. Reserve. They're meeting again this month, and it's obvious that they're not going to lower rates this month, but they're starting to say they're getting confidence right now.
That's correct. When Chair Powell was testifying before Congress this past week, he said that they are close to having enough confidence to start cutting rates. They don't feel as though they need to send the economy into a recession in order to tame the beast of inflation. And he has said that basically you can think about 1 to 2, maybe 3 cuts this year. He doesn't want to really telegraph it too much because he doesn't know how the data will play out. But so far, so good. And it does look like it's not going to be a March rate cut. It could be something closer to maybe June instead.
And of course, we're starting to see some confidence come back in the market. Some of it is FOMO, fear of missing out, but the economy is still on strong standing right now. And the second part of that is earnings have been good, and the comparisons are going to be beatable as we move into the next quarter.
That's right. We did have an earnings recession in 2022 and in 2023. Kind of sets a low bar, and a lot of people were caught flat-footed, maybe being too conservatively positioned with portfolios, and that's why we've seen this flood of people coming back into the markets, driving prices higher. That can continue. You know, the trend is your friend until it no longer is.
Right.
I mean, it can turn rather quickly, but it typically takes a while for those expectations to start turning a little bit more bearish, and still, I think they're in that bullish channel.
And Danny, there's $8.8 trillion on the sidelines, and that may find its way back into equities at some point. So obviously knowing how your portfolio is positioned right now is so important.